Hi, this is Michael Ogechi Abbey with Enterprise Express Tax Service. A lot of the main question I'm being asked is what's new for the 2024 tax filing season? And it's kind of hard to explain because there's a lot of times a lot of detail that's involved. So, what I decided to do is summarize it and just go over a quick summary that hopefully will be easy to understand. So, without wasting much time, let's get started. I'm going to be reading out from some of my notes here. Standard deduction. Well, the government gives you a standard deduction for filing taxes. So it's a deduction that's taken off right off the bat for filing taxes. And it's usually based on your filing status. So you could be filing single, you could be filing married, filing joint if you have a partner, or you could be a qualifying widower who just lost a spouse or a partner, for instance. Okay. And so the standard deduction for married filing um, couples who are filing jointly for the 2024 tax year has risen to $29,200. Now, this is an increase of $1,500 from last tax year. Okay, so if you're married filing jointly with a partner, your standard deduction has risen by an additional $1,500 to $29,200. Now, if you are a single taxpayer, or you are married filing separately, that standard deduction now rises to 14,600 for the 2024 tax filing year. This is an increase of $750 from 2023. So one thing you probably want to take note of this is a lot of people come to me sometimes and say, I want to file married filing separate for various reasons. You will notice that there is a big difference in the standard deduction if you file married filing joint or if you file married filing separate. As a matter of fact, if you file married filing separate, you're almost considered to be filing as a single person, pretty much. And so I do tell people think very carefully before you decide to file married filing separately. There are a few exceptional reasons why you would want to file married filing separately. For instance, if you either of you have like an issue with the IRS, or if there's a debt held by one party with the IRS, then you may want to consider filing married filing separately, only because when you file married filing joint, it's considered, one account. And so if the IRS is going after one person, they're going after both people at the same time. But if you file married filing separately, then that will obviously not be the case. All right. For if you file head of household, meaning that if you are deemed to be the head of household and you have a dependent and you qualify to file as head of household, then your standard deduction will be $21,900 for the 2024 tax year. And this is an increase of $1,100 from the amount for tax year 2023. All right, now let's go on to the marginal tax rates. And this is very important because a lot of times people, when I tell them, for instance, that they're owing taxes because they're making a certain amount of money, the question is, well, what's my tax rate? How can I be taxed so high? And it's very important to understand that in each category, there's a different tax rate that you are taxed. And a lot of people don't understand how much you're really being taxed on the income that you make. So let's go over this real quick. This is called the marginal tax rate. That's how the IRS describes it. For tax year 2024, the top tax rate, meaning the highest tax rate, remains at 37% if you're an individual single taxpayer with an income that's greater than $609,350. So you will be taxed at 37%. And I want you to keep that figure in mind. And if you can, get a calculator and calculate your income. If you make above $609,350 and times that by 37% to get your tax rate, it's probably going to be a mind-blowing number. But this is what you're being taxed, okay? If you are a married couple filing jointly, you will be taxed at 37% if your income exceeds $731,200. Okay? If you are married, filing jointly, okay, you will be taxed at 37% if your income exceeds $731,200. All right, let's go a bit below this. If your income exceeds $243,725 and you are single or married filing separate, then you will be taxed at a 35% tax rate. And that's pretty big as well. So you begin to see the trend here. There is an advantage if you are married or married filing joint. Once again, I'm going to read this over again. If you are single or married filing separately and you make over $243,725, you will be taxed at a 35% tax rate. Now, if you're married, that amount that the IRS allows is now increased. If you are married, filing jointly, that amount now increases to $487,450. $487,450, and you will be taxed at the 35% tax rate. All right, now let's go a little bit lower. If you are single and filing separately, single or married filing separately, and you make over $191,950, then your tax rate will be at 32%. Again, if you are single or married filing separately and you make over $191,950, then your tax rate is deemed to be 32%. If you are married and you file married filing jointly with your partner or your spouse and you make over $383,900, then your tax rate again will be 32%. Let's go down to the next marginal tax rate. If you are single or file married filing separately and you make over $100,525, then your tax rate is 24%. Again, if you are single or you file married filing separately, your tax rate will be 24% if you make over $100,525. In the same token, if you are married and file married filing jointly and make over $201,050, your tax rate will be 24%. Next marginal tax rate. If you are single or file married filing separate and you make over $47,150, then your tax rate will be 22%. Again, if you are single or you file married filing separately and you make over $47,150, your tax rate is at 22%. That's your marginal tax rate. In the same token, if you are married and file married filing jointly, then if you make over $94,300, your tax rate is at 22%. All right, let's go down to the next line. If you are single and or file married filing separately, and you make over $11,600, then your tax rate is at 12%. Once again, if you are single and or file married filing separately, then your tax rate is at 12% if you make over $11,600. Same token, if you are married or file married filing jointly and you make over $11,600, well, let's go back again. If you are married, this is a correction. If you're married and you file married filing jointly and you make over $23,200, then your tax rate is going to be at 12%. Okay. The lowest marginal tax rate is 10%. This is for incomes of single individuals with incomes of 11,600 or less. Same token goes for 10% tax rate if you are married, filing jointly with an income of less than $23,200. In these cases, then your tax rate will be at 10%. Okay, so it's important to to kind of go through especially these marginal tax rates, because that's how you determine how much taxes the government is going to tax you. Talk to your tax accountant and have them give you an idea, work through the numbers to let you know what to expect based on the income that you are earning. Another important thing here is for the 2024 tax year, the maximum earned income tax credit amount is $7,830 for a qualifying taxpayer who has 3 or more qualifying children. Okay, so this is an increase. Last year, that amount was $7,430, and this year it's $7,830. Okay, so that's pretty much what I'm going to cover for now, because it's quite a lot. But I figure that these were the most important new developments for the 2024 tax year. I will be doing more videos, of course, on this, so expect to see more on some new developments for the 2024 tax year. But these are the most important ones that you need to bear in mind based on what you might expect for your 2024 tax filing. Once again, my name is Michael Ogechi Abbey with Enterprise Express Tax Service, and it's always great serving you. Bye.